Good morning guys, how are we all doing? I am Dan from Trading with Dan. This is our quick Sunday morning Bitcoin update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour still holding above our little support zone now. We can call it a support zone, not a resistance zone, seeing as we are above it. But yeah, you can see yesterday we were kind of trading just above it. We actually had a very nice test down. Yeah, literally to the tick of the lower end of the range, and then that basically gave us a nice bounce back above. Didn't quite get up to the next level. Didn't quite get up to the $60,000 level. Just shy. Obviously that level got front ran a nice round figure of 60,000. Some people were clearly looking to eject some bitcoins from their portfolio. But yeah, so we found ourselves still above this resistance zone, the support zone. So obviously we are in the midst of a pretty substantial move down, but we are showing signs of life here. Like I said, it's important to hold this level. It's important to get back above 60,000. It's important to get back trading in this $60,000 to $64,000 range, and then it is important for us to break above $64,000, and then we will then the fun will resume. So yeah, that is it. Not really much else to look at there. If we look at the Ethereum Satoshi pairing, looking particularly bullish here, potentially bull flagging this out, so if we do basically play out this bull flag, then we are going to be deep into this resistance zone, and then potentially looking for a larger time frame blue sky breakout in this pairing, which could be very exciting. If we want to look at the USD pairing as well, we can see it is trying to get above this important horizontal we've got here. I mean, if it does get back above here, this will start to look particularly healthy again, and yeah, confidence potentially will flow back into Ethereum. And then if we do get that move up in Ethereum Satoshi pairing, then we will quite literally be off to the races, assuming Bitcoin also gets back above 60,000 as well. It will start to look pretty good. Not much else to look at in the rest of the markets because they were obviously closed and not been trading. What I do want to say, probably required listening, is if you are interested in seeing a different perspective on inflation, inflation expectations, what we can expect going forward. There's an absolutely brilliant interview on Macro Voices. With Jeff Snyder. Jeff Snyder is definitely one of the top people to listen to. I think in this sort of free financial information arena, he's definitely one of the best people to listen to. Macro Voices is also one of my all-time favorite podcasts and sources of information. It is highly dry, difficult to listen to, boring. The guy's voice is annoying, but honestly, it is the best information. And then also that George Gammon guy, you guys will know how not dry how he basically gets across his information. George Gammon, I'm 99% certain. I know that he's already said that he's basically I keep saying Hedgeye. Hedgeye is another really good source of information, but it is you have to pay for it. Yeah, Macro Voice said it is his favorite podcast, and it has been my favorite podcast for years. And I am literally 99% certain that George Gammon just saw how dry, in inverted commas, Macro Voices was, so kind of did he did a better, more appealing version of it. And if anyone wants to ask him, I think he will pretty much admit that. He's pretty much certain he's thought, you know what, I can get this information across in a more interesting fashion, and build me up some YouTube subscribers. And obviously he's one of them property guys. I mean, I like George Gammon, but he is one of them property guys, and we do know how arrogant those guys are, and how they do like to do like the attention, the fame and attention. So yeah. that is a very good interview. Basically, what it is realistically saying is that the bond market is actually correct. There isn't going to be any massive inflation going forwards. This is transitory in the respect that, as Milton Friedman said, inflation is every time and always a monetary phenomenon, and there isn't actually lots of money being pumped into the system at the moment. The inflation is literally from supply chain problems and and government policy, obviously with the obviously not wanting the what's it called, the where the companies basically want to be seen to be like ethically like climate change thing. I've literally forgot what the term is now, but yeah, the drive towards that with companies is obviously is causing problems with the production of certain energies, which is obviously resulting in higher prices. So basically what he's saying is that supply chains and government policy is what is driving prices, not monetary policy. And obviously inflation is always and every time a monetary policy. So this is transitory because supply chains will basically be relieved, and also because this isn't a monetary driven inflation, because this isn't driven by monetary policy. What it means is that as say petrol prices go up, fuel prices go up, that basically takes away money that can be spent in other parts of the economy. So it does overall balance itself out. You have lower prices elsewhere because there'll be lower demand because of obviously the money that consumers are having to pay, and obviously a high energy costs feed through to the prices of everything. So obviously if there is a monetary stimulus that is driving prices higher, then it drives everything higher, and that is fair enough. But obviously if there isn't that, and it is just non-monetary policy, and I know you're thinking, well, they're printing loads of money, that money literally doesn't get into people's hands to spend. There was a certain amount of stimulus checks that did come into people's hands to spend, but the rest of the money isn't actually coming into people's hands basically. So it isn't monetary inflation. And then basically the argument then continues that, well, okay then, the Biden administration has literally said it's gonna, like, in what is a pretty ludicrous statement, it said don't worry about inflation because we're going to throw loads of money at it. So what that could imply, and some financial analysts are reading into it as basically implying that Biden will just print checks so people can afford petrol, basically. That's the gist of it, and they can afford food. And if they do that, that will be monetary inflation. That will have to be that money printed would have to be monetized by the Fed, because obviously the federal government doesn't have any money. It's obviously running twin deficits. So that would be monetary inflation, and that would drive inflation. That would be inflation and would drive inflation, but the bond market is telling you that ain't going to happen, basically. That's what Jeff Snyder's saying. He's saying, look, yes, yeah, that is a course that they could take, and is a course that Biden is saying he's going to take, but ultimately the bond market is calling BS on that, and basically saying he won't do it. And it kind of makes sense. I mean, if we already have elevated prices due to non-monetary things, if you then bring a monetary element of real inflation, then that is it. The cat will be out of the bag, the horse will have bolted, and we will be that will be literally the start of a potentially a currency collapse. And obviously that won't be allowed to happen. It'll always be a case of just the death by 1,000 cuts, the slowly boiling the pot whilst the frog is in it, to slowly inflate away the debt, not to do it all at once. So that all being said, very good interview. Macro Voices, Jeff Snyder, the latest one. It is dry AF. It goes on for over an hour. Although I think the Jeff Snyder bit probably doesn't go on for a full hour. Maybe it goes on for about 50 minutes. But it is must reading, in inverted commas, must listen to. But right, so all that being said, let's have a look at the stochastics 4 hour basically did its job so far as what the 4 hour can do, and it held us above that support zone. So the baton has been passed over. The 10 hour, which has got upward momentum here, 12 hour is looking to turn up here. Daily still pointing down but looking to turn up. These 10, 12 and daily are gonna what is gonna have to basically get Bitcoin above 60k if that is to happen, and then these higher time frames are still obviously not going to be looking too good. 2 days still diving, 3 day plenty of room to run, 5 day turn down, weekly turn down, and then these then have to be kind of counteracted by obviously the bi-weekly and the monthly. But like I said, 12 hour, 10 hour get going, daily pulls through. I think the market will start to grow in confidence. Reestablish itself within this range, get back into the $60,000 to $64,000 range, and then if we are lucky, which I suspect in my guess would be maybe, we'll get back above 64, get back above all-time highs, and then we'll just continue with the uptrend. So points to the downside, clearing validation back below here, back below 55, down to 52. Like I said, we can hold 52 in the macro picture, and turn back up from there. No dramas there. Lose 52, it starts to look incredibly dicey. But like I said, that isn't my preferred option. Clearly not my preferred option. Clearly not what I think is the most likely option for what it's worth. Yeah, that is it, guys. So I hope you guys are all having a great weekend. Remember, macro voices, Jeff Snyder, and yeah, I shall speak to you guys soon.